All right, today we're going to talk about SoFi, a company that's been on one of the most insane roller coaster rides in the stock market. Seriously, it went from market darling to the doghouse, and then maybe, just maybe, back again, all in just a few years. Okay, let's get into it. So, chances are you've seen the name. It's plastered on that massive, beautiful stadium out in Los Angeles. But behind that very, very expensive sign is a financial tech company with a story that is just full of drama. We're talking hype, a total collapse, and a potential comeback that is really powerful. So let's set the scene. So SoFi goes public in 2021 through a huge SPAC deal, that faster way for companies to hit the market. And they did it right at the absolute peak of market craziness. It was the poster child for that whole era. Just tons of hype, a sky-high price, and, well, no real clear path to actually making any money. And the result? The stock absolutely cratered. It fell 72% from its peak. All that initial excitement, just gone. And that brings us to the big question. By the middle of 2024, even after it started to turn a profit, the stock was trading at a forward PE ratio of 87. Now, to put that in perspective, most big, boring banks trade at like 10 to 14. So was this valuation just some leftover hype from the good old days, or was the market actually seeing the very beginning of a monster turnaround? So here's the game plan for this explainer. We're going to start with the bull case, what people were hoping for back in 2024. Then we'll look at the incredible transformation that happened in 2025. After that, we're going to pull back the curtain on the strategy behind that growth, take a peek at what's coming next, and finally, we'll deliver a verdict on that sky-high valuation. Okay, so let's hop in the time machine and go back to 2024. The hype has vanished, the stock is in the gutter, but a new story is starting to bubble up. This was the moment that some investors started to shift from skeptics to true believers. For anyone betting on a comeback, the thesis was pretty simple, but it was also a huge challenge. SoFi had to prove it could do 4 key things. First, it had to get sustained profits, not just a one-time lucky quarter. Second, it had to get its massive spending under control. Third, it had to diversify so it wasn't just that student loan company anymore. And finally, the big one, prove its all-in-one financial super app could actually work at a massive scale. And you can see right here, by mid-2024, that diversification was already well underway. I mean, student loans were still a big chunk, almost a quarter of the business, but personal loans, they'd become the main engine, making up over half the entire portfolio. The key thing here is that the shift was already happening. But it all came back to this one kind of crazy number, 87 times forward earnings. It was a valuation that just screamed Silicon Valley tech company, not bank. The bulls, they argued, hey, this is just based on their first year of profit. Explosive growth is coming, and that multiple is going to come way down to earth. The bears, on the other hand, just saw a dangerously, dangerously overpriced stock. So let's fast forward, because 2025, that's when the bull case really got put to the test. SoFi had to deliver some serious growth to justify that price tag. And, well, they did. The whole thing really started to pick up steam in late 2023 with their first ever profitable quarter. That means for the first time, they were bringing in more money than they were spending. But then 2025 hits, and things just went into overdrive. I mean, quarter after quarter, they just smashed expectations, set new records, and told Wall Street they were going to make even more money for the rest of the year. The acceleration was just stunning. In the second quarter of 2025, revenue growth hit 44% compared to the year before. That wasn't just good. That was the fastest growth rate the company had seen in over 2 years. Things were heating up. And it wasn't just about revenue. The user base was absolutely exploding. They added a record 850,000 new members in that same quarter. Just think about that. In 3 months, people were just flocking to the platform. By the third quarter, the bottom line was just undeniable. A record $139 million in GAAP net income. We're talking pure profit after all the bills are paid. The company wasn't just getting by anymore. It was generating serious cash. So, how'd they do it? And this brings us to the engine behind all those numbers, a strategy SoFi calls its virtuous cycle. This really is the secret sauce, the core of their entire business model. Okay, so the fancy name for it is the Financial Services Productivity Loop, or FSPL. But the idea is actually super simple. Get a customer in the door with one product, a lot of times a free one, and then make it incredibly easy for them to start using more and more of SoFi's other services. You pay to get the customer once, but you get multiple streams of revenue from them over time. Their CEO, Anthony Noto, he laid out a perfect example. A member might join using SoFi Relay, which is a free tool to track all their finances. Then, from there, they see they can get a high interest rate, so they move their direct deposit over. With that extra cash they're now earning, they open up an investment account. And finally, when the app recommends they can save money by consolidating their 20% credit card debt with a cheaper SoFi loan, they do that too. One customer, 4 different products. That's the loop. As Noto himself says, this is their sustainable competitive advantage. It's their moat. By making each customer more valuable over time, they can reinvest that money back into the business to offer better products, better interest rates, and more benefits, which, you guessed it, attracts even more customers. It's a really powerful feedback loop. And you can see the results of this strategy right here in the numbers. A huge part of their plan was to grow high-margin revenue that didn't require their own money. And just look at the growth of their loan platform business. This is where they make loans for other banks and just collect a fee. It jumped from $131 million in Q2 to $168 million in Q3 of 2025. That isn't just growth, that's smart, very profitable growth. But the story doesn't just end with personal loans and checking accounts. SoFi is really positioning itself as a technology company at its heart, and they've got some pretty ambitious plans for what comes next. They are moving aggressively into some new frontiers. They've already launched low-cost international money transfers using blockchain to make it cheaper and faster. They're relaunching crypto trading, which a ton of users were asking for. They've also built an AI-powered cash coach to give people personalized financial advice. And maybe the biggest deal of all, because they have a national bank charter, they're planning to launch their own stablecoin. That could be a total game changer. Okay, so this brings us all the way back to where we started. The company is executing, the growth is definitely real, and the strategy is clearly working. But what about that valuation? Remember that 87 times PE ratio back in 2024? The one that seemed completely insane to so many people? Well, after the explosive growth we saw in 2025, does that number still look so crazy? This table right here, this tells the whole story. That 87x ratio was based on 2024's initial tiny profits. But with the massive earnings growth and updated forecasts in 2025, that forward PE ratio dropped all the way down to around 30. And looking ahead to what management expects in 2026, it falls to between 9 and 13 times earnings. That's right in line with, and in some cases even cheaper than, the traditional big banks. The growth literally grew into the valuation. So what a story. SoFi managed this incredible pivot from a company that was pure hype to one that's pure performance. They proved they could grow and do it profitably at a scale that really silenced a lot of their critics. The question now is, after proving the model works, what's the next big test on its journey to becoming one of the top financial institutions in the country?